The current financial crisis has affected millions of people worldwide. Families have lost their homes, unemployment is soaring, and businesses just are not making money. But what caused this to happen? It all begins with the giant pool of money. The giant pool of money is all of the money in the world that can be invested. In 2006, the number was about $70 trillion. Investors were looking frantically for somewhere secure to invest. Since U.S. Treasury interest rates were very low, investors put their money into the growing housing market.
Investment firms were looking for CDOs to provide to their new investors. CDOs are a type of mortgage-backed security, meaning they are made up of many mortgages put together. CDOs were given high ratings by credit rating agencies, so many people invested in them, even though they weren't safe. This caused an increase in demand for mortgages, so banks made it easier and easier to obtain loans. Eventually, NINA, or No Income, No Asset loans, were created to get the maximum amount of mortgages, even though they were given to people who would normally default.
Many subprime mortgages, loans given to those who wouldn't have normally received them, were also produced. Adjustable rate mortgages also came about in order to draw more people in. Payments on adjustable rate mortgages would soar, leaving people unable to pay. More and more of these unstable mortgages were being put into CDOs and given good ratings. Then the payments stopped coming in and many began to default on the loans. The housing market began to fall and investors wanted out badly. Investors had taken out what are known as credit default swaps on CDOs. Credit default swaps were like insurance. If the CDO loses its value, the insurer will pay the full value of the CDO to the insured. However, banks do not actually have to own the investment for which they bought the credit default swaps.
So as CDOs dropped in value, banks and other agencies had to pull off the value of the CDOs to those who had taken off credit default swaps. This caused the economy to dig itself into a bigger hole. CDOs were created in a chain-like manner. Small banks would take out huge loans to buy up mortgages and package them together. The mortgages would be sold to different companies who made them into CDOs and sold them to investors.
The small banks were strongly leveraged so they could take out huge loans even if they did not have that much money. As investors stopped investing, Wall Street and big banks stopped buying the CDOs. The small banks were left with all of these mortgages that they could not sell, and a large debt to the bigger banks for the money they had borrowed to buy the mortgages. Small banks, because they were so highly leveraged, had to go under. This left the big banks with losses in the millions, and then these losses rode the chain all the way up to the investment firms and the investors.
Between these losses from the CDOs themselves and the payments that had to be made with those with credit default swaps, the economy had taken a huge hit all at once. The global pool of money also took a hit, drastically being decreased in size. It comes back to people who normally could not have large mortgages were able to obtain them because it became so easy. Towards the end, people did not have to prove anything to obtain a large loan. Adjustable rate mortgages also tricked people into believing that they could afford loans until payments spiked and they could not afford them.
Now it is very hard for people and countries to borrow money, and many businesses have gone under, creating hardships for the economy as a whole. This crisis that may have started in the US has affected people from many different countries across the world and truly become a global crisis. CDOs, credit default swaps, bad loans, risky investments, and an interconnection of businesses have all had a hand in the fall of the economy. The current crisis is debated to be worse than the slump in the 70s. There are many things that have come out of the economic crisis, and many solutions to fixing its problems.